Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of more backward steps in China. But first, there is something of a presumptive relief rally going on Wall Street markets today, anticipating a clear Clinton election win. Equities are racing higher, up 2% in mid-afternoon trading. Bond yields are also sharply higher, and gold is down. It's down $23 an ounce. Markets would also usually be on hold at this time if they thought a result would be close, but clearly they don't. Let's hope they're right. If Clinton wins, a new way to redress income inequality might come from an attack on monopsony, where a renewed focus goes on bolstering competition in many markets. It's certainly an economic policy trend to watch out for. If applied in New Zealand, firms selling building materials, supermarkets and telecoms would be in the firing line. Big unions might struggle with the concept too. In Europe, the consequences of Brexit are starting to bite for London. Global banks are quietly building up their investment banking teams in Frankfurt as German deals market hots up on the back of some large Chinese transactions and marking an important shift in financial muscle. In China, they published their foreign currency reserves data today, and while it was lower again, the fall was nowhere near as sharp as some were speculating. The outflow was relatively modest, $46 billion, leaving them with a hoard of $3.12 trillion. Mind you, that is an outflow of $320 billion over the past 12 months. They also raised their gold stake to 2,030 tonnes, a 15% gain from the start of 2016. And economic reform seems to be on the back burner in China. Today, Finance Minister Liu Zhiwei, widely seen as a voice for reform, was abruptly removed in the latest sign that President Xi is filling key roles with more trusted allies. China is also showing less tolerance for views it doesn't like in Hong Kong. Instability there could see even more migrants here. Today, Moody's ratings agency said that climate change vulnerability will become an increasingly dominant factor in sovereign ratings. At this time, however, they say Western Europe, North America and Australia, as well as the huge landmasses of Russia and China, were least vulnerable. In New York, the US Treasury 10-year yield will start today much higher at 1.83%. Here as well, wholesale swap rates will start higher after another strong gain yesterday. The US benchmark oil price is holding, now just on $44.50 a barrel, while the Brent benchmark is just above $45.50 a barrel. The gold price is down sharply, now just under $1,281 an ounce. New Zealand dollar will start today pretty much where we were at this time yesterday, at 73.2 US cents and staying in line with a resurgent US dollar. On the cross rates, it is now at 95.1 Aussie cents and against the euro at 66.3 euro cents. The TWI is at 77.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.